Let me start with the price action in Nvidia stock yesterday. We dropped almost 7% in trading after news of these curbs came out. First of all, do you think that that reaction is warranted? And how much of an impact do you think these H20 chip curbs are actually going to have on Nvidia's bottom line?
Yeah, look, I think it's warranted because ultimately, I mean, you're looking at number cuts that are probably going to be 10, 12% when it's all said and done. And I think it's less about this in terms of the financial impact, it's what the ripple effect. This is essentially a do not enter sign that's in front of China, from the White House. And it's Nvidia, of course, AMD and others. This is just the first step, I think, that we're seeing, just the massive trade tariff war that's been a gut punch to tech.
Yeah, but Dan, at the same time, what we have seen is that carve-out for consumer electronics. It's temporary, but it seems as though the administration has been listening to the likes of Apple and trying to buy a little bit more time to help them reconfigure. Will we see a similar type of carve-out, do you think, for Nvidia, or has that ship sailed?
Yeah, I think that ship sailed. Look, I think Nvidia itself, and Jensen, he'll talk about it over the coming months. I think they were caught by surprise. And I think the reality is that no one knows the rules of the game. And I think that continues to be the issue here. What we're talking about now, could that change in the next hour? Yeah, it's possible. And I think that's set in stone, this sort of avalanche effect in terms of uncertainty that's cascading down. That's why I think we're going into an earnings season. No company's going to give guidance. I think number cuts are basically 10, 12% across the board. You need to be able to look past the storm and hope that we're going to have negotiations soon with China cooler heads prevail.
Yeah, I mean, you just said China's become a no-go zone or do not enter market, I think you said. Ultimately, can you see a full decoupling of U.S. tech from the China market? I mean, is it actually technically feasible?
No, let's talk reality. It's not possible. So I think investors, look, if investors really thought that, stocks are down much more than they are today. I mean, the market's basically pricing in at one point that, these sort of two bullies in the back of a schoolyard, someone's going to have to blink. And you're going to have to get to some sort of negotiation process that could take time. But reciprocal tariffs in their current form basically cannot exist, in terms of the 145 or 245%. And look, when it comes to tech, U.S. tech's caught in the storm. Investors are caught in the storm. And I could tell you, in 25 years doing this, dot-com bubble, financial crisis, it's the scariest time that I've ever seen, especially for tech investors.
Yeah, that's pretty damning. I've got to say, in all the times that I've spoken to you, you've been pretty upbeat and bullish on the sector. So it really is quite significant for you also to sound so bearish on where we go from here. Is there any scenario under which tariffs are applied or Section 232 type tariffs are applied and tech can still perform well?
Look, I think it comes down to go back to pre-Liberation Day, okay? 15, 20% was always the view of reciprocal tariffs. And if that happened, market right now, you're looking at NASDAQ, 15, 20% higher. The reality is that the tariffs in their current form are untenable. They need to be manageable to a point where some could be passed down, some could be eaten, but ultimately you cannot have numbers these high because essentially it causes a shut-off valve for U.S. tech and for the consumer. And that's been our whole point the last few weeks. Let's talk reality versus fairy tale that sounds good in front of the microphones. Supply chain is in Asia. It's hard to belong to the U.S. supply chain. You could have some onshoring, but the reality is that, it would take Apple 3 years to move 10% of its supply chain. That would cost $30 billion. So let's just talk reality, and I think that's what companies want to talk about.
Okay, a final question for you. Our Bloomberg Intelligence analyst, Robert Lee, put out a note yesterday saying that, ironically, on the back of this and on the back of these curbs, China could actually get a leg up because what it forces is subscale firms in China to leave the market. Though there's going to be short-term disruptions, some of the bigger names already have ample supply of chips, and they'll be forced to innovate, to invent their own chips so that they become even more autonomous from the U.S. Do you buy that view?
That our whole point is that for the first time in 30 years, U.S. tech's ahead of China. And what you're essentially doing with these tariffs, you're cutting the knees of U.S. tech, sending it back years. Guess who wins? China tech. And I think that's the reality of what this twilight zone we're living in, where U.S. tech and investment have been caught in this Category 5 storm.